Hello, everyone, and welcome aboard. It's wonderful to have you here on a Sunday. Sorry, I didn't wait, did I? Thank you for that. Welcome aboard once again, everyone who's in the room. It's good to have you here on a Sunday, the 18th of April. Yep, in 2021, where I think we've had a little bit of an eventful start to the weekend, or are we near the end of the weekend, of course? But I think there's been a little bit of a shuffle around the place as we look forward to chatting about those sorts of things with all of our experts or specialist traders coming up in the show. Hopefully, they'll all be here, but I must warn you that there is an event going on at the moment with a lot of our traders, and they are committed to that. And for that reason, we may be a little bit light on in terms of our specialist traders today, but I'm sure that the content that you will get will be worthy of listening and certainly paying attention. First up, as always, we're going to have a look at the big picture, and that big picture may have changed just a little bit, somewhat, in some areas so far over the weekend. And to discuss all of those sorts of things, it's a very, very good evening in New Zealand to our good friend Julian McCree. G'day, mate. How you doing?
Geoff, hi, how are you? And good evening. Welcome, everybody, wherever you are in the world listening into the show. I think we'll deal with the weekend's events in a little bit. And yeah, it's been a crazy, crazy weekend. But let's just have a think back to last week. I think the key theme for me for what took place last week is all to do with what happened in interest rates. So US interest rates, um, the US interest rates. Sorry, I'm trying to do two things at once, which is always a very, very poor decision.
You need a
So
sex
US
change
interest
to be
rates
able to
fell a
do
little
that. You
bit,
know that, don't you?
and the that's the 10-year and the 30-year interest rates fell a little bit. Let me just see if I can share a screen with you guys. That's what I'm trying to set up here. So just hang on 2 seconds while I get up there. I'll just share this one. It'll make my life easier, so we can see them all. So this is a chart of, hopefully you guys can see this, yell out if you can't, but this is a chart of US interest rates, 10-year interest rates. So ignore sort of the column on the right, got the wrong decimal place, but the numbers are dead right. So what we've seen over the course of December, January, February, March is the um, yields rising. That means prices of treasury bonds falling, but yields rising, and that's the key message to this, right? We've got yields going up. So what we have had and have seen happening during that time is we've seen interest rate sensitive sectors, some of them not performing as well. So most notably our old friend, the gold market. So if you look at gold over the same period of time, it doesn't take much of a genius to work out. And we talked about this last weekend, right? How the gold price has fallen somewhat as those yields have risen. You can see how that's been happening. We've had a fall off in price as those yields have gone up. They seem to be quite well correlated. So unsurprisingly, we've had this week a movement down in the course of the last few days. It was a bit more severe over the tail end of this week. A movement down for the interest rates in the States. Now, as we can see, what's happened with that is that the gold price has consequently moved up, right? That correlation remains quite strong. And I think Ainslie, if she's around, will talk a little bit more about that, I'm sure, as she comes on the show. But there's been some key support levels broken. I think the 50-day moving average is somewhere around this price point as well, too. Support point, resistance points broken. So it's going to be quite interesting. The question that is on everybody's lips is, can gold hold it? And I'll let Ainsley talk about that a little bit more later on. But really, for me, there hasn't been a great deal of action outside of that, and I think really been for me a quiet week in terms of trying to figure out what to do trading wise. I think the other key thing for me is what's going on in the rest of the world, and the rest of the world is in crypto. So a couple of things I'd like to highlight. Hopefully, you guys can see this screen. So this is the black line is a a rebased chart of the crypto, and the candlesticks are the S&P 500, I think it is. Oh no, the Nasdaq. It's the Nasdaq. That's good enough. The point I want to make about this is, apart from this final few days here, is actually how incredibly well correlated cryptocurrency movements in the majors in Bitcoin is with the S&P, and how I want to show you that is just moving back a little bit through time, and I might have to play with these things to rebase them as we saunter through, but I just want you to see how you see movement down here, you see movement down here, you see movement up here, you see movement beginning up here. So there's a little bit of a movement down here, and there was a little bit of movement down in Bitcoin, and similarly down here and down in Bitcoin. So down in the stock market, but down in Bitcoin first. So it seems to me that Bitcoin's a little bit of a leading indicator. The last few months, so this is going back to May of last year, the last few months, there seems to have been quite a high correlation between those corrections in the cryptocurrencies and movements in the S&P. Now, you're asking me, why is that important? Well, it's important because of what's going on in the S&P at the moment. You know, you guys all know the story. You can look at stock market prices everywhere. Let's just have a very quick look. This is the Nasdaq. It doesn't take a genius to work out. It has been rallying the last few days. And if you look at the S&P 500, it's been going up even more. If you look at the Dow Jones, it's been pretty much a straight line up apart from the last 2 or 3 days. So the thesis here is that we've seen an incredible move up in stocks, which has been followed, by the way, or matched, in fact, run a little bit earlier, I think, again, by the Bitcoin and Ethereum and Dogecoin and a number of other altcoins as well, too. I saw that NEO made a significant move last week as well, too. Some really interesting movements. I hope I've got this right, McCree, that Dogecoin is the way to pronounce it. But that went from something nutty like 5 cents a little bit of time ago up to the 44 cents, I think, over the course of 2 weeks. Crazy, crazy price moves. Always interesting in crypto. And then we get to this weekend. So let's see if we can find the news about what's been going on this weekend. So I'll just flick over to the chart here. Again, I don't want to steal Shukri's thunder. He'll be talking about that. You guys can see these moves, right? This is Bitcoin over this weekend. So we started the week, started Friday somewhere around about these levels, about 62,000. And we now find ourselves having hit a low over the weekend of 51,000, and now we're down at 54. So crazy, crazy moves. I think that's the news. So why is this important again? So because I don't really trade crypto that much. This is Shukri's area, but I view it as being a leading indicator. So this means probably next week we're going to have some fun and games in the stock markets. Now, what does that mean for us FX traders and for us gold traders? Okay, well, we have to respect the fact that there could be some movement and some volatility in those asset prices in the real financial world, not the crypto world, over the course of the next few days. So I would expect to see S&P and Dow Jones maybe trade off a little bit, and maybe quite quickly, quite sharply. After all, they've been on a tear as well too recently, so it wouldn't be unreasonable for them to have quite a vigorous correction if that was to take place. And that would have an impact on some of the currency pairs. So I think dollar yen would probably fall, yen would strengthen. You might well see the Swiss franc strengthen as well too. So this will be a flight to quality trade that you may see occurring out there. So be on the lookout for those moves occurring if the stock market takes its lead from the cryptocurrencies, as it has done in the past, running a couple of days afterwards, starting to see that movement down. So not a perfect correlation. Nothing is ever perfect in this place. All we're doing is trying to get a little bit of a better guess than we normally have. And so my thoughts for next week are going to be very much thinking towards what's going to happen over the follow through from the crypto space, Geoff. And that's my 5 minutes done today.
Cheers, mate. Really appreciate it. Can you actually hear me? I was talking to you earlier.
I think you're on mute, Geoff.
I'm actually not.
Oh.
Can you hear me at all?
You seem very... It may be that I'm very quiet. Hold on. I'll turn up my speaker. Yay!
There you go. Is that better?
That's much better. Technology, a wonderful thing.
Mate, I actually want to take you back because we've got a few minutes. If you've got a few minutes,
sure.
I'd just like to dwell a little bit on one thing, because I don't think Alexis is in the room, because I'm sure she's involved with IFP this evening. The very first chart you put up was extremely interesting to me, and it gave an indication as to where you're at with Bitcoin, not so much Bitcoin, but the crypto space being a leading indicator for the S&P, for instance. How can that be from a logical point of view? And I think logically, right? Not necessarily as a
Yeah.
result of information, but I think logically, I see something that's been around for 10 years, and versus something that's been around forever, minus a few. But the one that's come in is leading the one that's been there for forever, if you like.
Great question. Look, I think that's a great question, Geoff. I think the short answer is the world is changing at the moment, and so the cryptocurrencies is seen as being quite a trading nirvana, a very much an active trading space. And maybe I think it's less encumbered by order flow. So there's we know that there's no fundamental economic numbers that come out in the crypto space. There's not a lot of things to get in the way of it, and I think it's a little bit of a purer instrument. And to answer the question, it's both. It's the S&P and the Nasdaq as well too. I've got the Nasdaq up here for illustration purposes, but it really doesn't matter. So, where there's been a lot of speculation taking place in the S&P and the Nasdaq, maybe it takes a couple of days for the people in crypto to feed it through to that equity space. But it certainly seems to be, and this is the challenge that we have, right? It seems to be right now, at the moment, to be reasonably correlated. That doesn't mean to say it will be in the future, but there seems to be an element, and I just stress this. I'm not trying to give loads of riders here, but let's lots of caveats, but just let's bear in mind that this isn't a one-to-one correlation, right? It's merely a directional bias that may be occurring more than 50% of the time, right? So if you get that sort of directional bias out there, then I think it's something worth looking at. Whether it stays or not, I don't know. We probably need to see some of the enthusiasm come off the boil in the cryptocurrencies, or maybe just a stabilization for a little while, and that would probably then cause that relationship to part company. But at the moment, as everything is very much thought about as a very aggressive vertical market, including the S&P, including the Dow Jones. You guys go look at the weekly charts, right? You don't need me to show you those. You can see those. It wouldn't be unreasonable to think that where those markets are in the process of going vertical, that you'd see a relatively high correlation these days, given it's probably the same people trading it. So that's my 5 cents worth at the moment, Geoff. It may not be anything that's going to be the same going forward, but it certainly seems to have a bit of a predictive element of it at the moment.
That same word is something that interests me as well. And if you have a couple more minutes, I'd really like to expand on that. One of the most famous expressions in trading or in financial markets is "this time it's different," right?
Yeah.
So have you seen this before? And is this different in your opinion?
I've seen this exact same thing before. It happened in 2000. Look, given that was 21 years ago, there's not a huge amount of people that would have that same experience out there, especially the ones who are trading in financial markets at the moment. There may be a few of the older traders who would have been around at that time and trading actively, but not a huge number. I mean, there's a lot of people who only started their trading career in the last 3 years, right? So, I've seen this exact same pattern occurring. And I think there was this is highlighted. There was a few companies set up in 2000. The classic one was a company that was launched, IPO'd on the stock exchange, that said, I don't know what we're going to buy, but we're thinking about buying something. And they raised $400 million to buy something, but they had no idea what they were going to buy. It's a bit like you saw in the South Sea bubble, and remarkably there was
is there a secret to that? Maybe I could do it.
Well, yes, and there was somebody highlighted, a friend of mine highlighted the H-Win stock in America, which is on let's call it on the pink sheets, or the relatively over-the-counter small people, which is in fact a delicatessen in New Hampshire that's worth over $100 million, where the CEO, CFO, and COO are all the same person, and he happens to be the owner of most of the stock as well too. But So for some strange reason, he was probably clearly going to buy something some point in time, right? But I'm not
Potential,
sure.
yeah.
I'm not sure that delicatessen is worth $100 million. But it's quite remarkable how you can get valuations like that when you print a high number for some of the shares. So these sort of things have happened before. It's a little bit of speculation. We all get that. We're not talking here about the entire market being crazy overvalued. People think that Tesla's worth a little bit more than it is, and when you look at the financials, if you're looking on a pure fundamental basis, it certainly isn't worth what it's priced at the moment. But nobody worries about that because traditionally nobody has ever worried about that. The stock market is all about enthusiasm, preferably some earnings growth as well too, because that normally justifies the momentum trades. But really, it's about just getting on the latest trends to exploit what really is essentially new technologies coming out, and that's what the stock market is really, really good at. Sometimes people lose out of that, but more often than not, you got new technologies coming out of it. Look, Coinbase, I don't think is worth $100 billion. It's had a couple of really good quarters based upon quite significant volume. But right now, that's the market valuation. You respect that. It could easily go a lot higher. Because the technology is going to become more ubiquitous, and that means that there's an opportunity there. I'm just not sure if Coinbase is going to be part of it. But the key thing for me is that technology, tokenization, is going to become part of our lives going forward. That's where essentially digital currencies will come from, amongst other things, which I'm a huge fan of. So the technology is really important, and if that means we have to spend a bit of money getting there, then so be it. The world is changing, and we have to recognize that and move with that technology. So. Yeah, that's a very long answer to that question, but I hope I started with an answer and then went into a bit of a more
Well, I think
detailed discussion.
it's far more enlightened am I than I was before I asked the question. But here's the thing for me, and you touched on that. In my opinion, there's a whole lot of moving parts to this, and which part actually settles, if there is to be a recalibration to digital currency, which is certainly front of mind. There's no question. Where do those moving parts end? I don't know that anybody's got the answer to that question.
No, they don't. But that's what markets are really good at, right? So they'll allocate a bunch of capital to an area, and out of that there'll be one or two winners. But they know that, right? They know that if they invest in, collectively they invest in the sector, that there's going to be, out of the 10 companies they invest in, there's going to be two winners, and the rest will be also rans or won't be there in 2 or 3 years' time. I think that's the sort of the process the stock market is very familiar with, and it keeps repeating over and over again. And we see it at the moment. You can remember the very noticeable ones with the vegetarian foods, right? So Impossible Meats is a classic, right? And which got hyped and then came off a little bit, and now settling into a more steady growth pattern where it's doing what they said they were going to do in terms of their financial forecasts, and it's more of a reasonable stock, and that's, we saw that with the also with the medical cannabis, the medical marijuana stocks as well too, right? I think that's still a developing story, but this sort of thing is happening more and more, and you tend to see these new technologies coming out. Look, the world's moving quicker, right? And so these things are going to happen more and more. We get these bumps. We've all been there. SpaceX is another one. That enabled Rocket Lab, a company in New Zealand, to go to be taken over by a SPAC recently at a quite high valuation. But that's perfectly fine. They're going to go to Mars, right? So I think that there's it's just the stock market's way of allocating money. Look, I think maybe I could just add something here. From our perspective, people are going sort of, okay, well, look, so what? I don't trade the Nasdaq, so how's this going to change my life, right? And the answer is, well, what it will change your life is in two ways, right? There will be volatility. Volatility will then feed its way into the foreign exchange market one way or another. It'll also affect oil. It'll also affect gold. And if you trade other commodities, it will affect those as well too. So it could be positive, could be negative. We don't know. That's what we're here to do as traders, is to try and figure out what's going to come with our, providing we stick to our process. But that's a key thing here, right? Is that if you're trading foreign exchange, you have these things at the back of your mind, and they're interesting. They're great to talk about, but is it going to affect what's going to happen to dollar yen or dollar CAD tomorrow? Well, who knows, sort of thing. Right? And so what we have to do is stick to our process. We're getting trading signals. We've got our reasonable view about where we think it's going off the weekly charts, of the daily charts if you're trading intraday. And we stick to our process and we continue to do it because this is what we're trading. Okay, I'm not trading SPACs, I'm not trading I'm not trading pink sheets, and to some extent I'm not trading altcoins either. So for me, I don't get involved in those things, but I'm noticing what's happening because it gives me a little bit of the clue towards my fundamental picture for the rest of the markets, which includes the ones that I am trading. And this market is incredibly sentiment driven at the moment, and momentum driven, and also one directional. So equally, if one market turns, a lot of others will turn at the same time. So that's really important for me to watch. And all of you guys out there should be watching it, because if we do feel there's some change coming, it'll probably be hard and fast. We've come a long way over the last year from those March lows that we saw. We could correct 30% here and nobody would bat an eyelid. But 30% is enormous, right? 30% in the stock market is just huge. The S&P going back to what, to 3,000, 2,900. Well, that's crazy as, right? But it's easily possible, and it doesn't mean anything's changed. So just be aware of this, right? That this is one of the things that can happen now. So my sense is volatility is picking up, and if that does happen, then the way the world works at the moment is the lower the volatility, the larger positions the funds can take in any particular asset. So if volatility starts to pick up in those assets, then that has implications for those positions which the funds are holding. So they have to reduce because a lot of them are volatility. They use volatility as their risk measure. So just bear that in mind, is that an increase in volatility often means people have to sell for no other reason than they're probably overexposed to that particular market.
You've just redefined something that everybody always knew. Well, I think they always knew, or maybe should have, maybe they don't. You should never assume that, I guess. The new normal, the new is maybe crypto space for now anyway. And the normal is it's just the same old thing.
Yeah. Trading JP Morgan shares, right? That's the normal.
Mate, thank you so much. I kept you up a little bit later than probably you anticipated, but I really do appreciate it. Thank you.
Not at all. Not at all, Geoff. Right, hang on. We have a question. Okay, there's a couple of comments come through. I haven't had a chance to read them all while I've been chatting. So let's have a quick look through the comments, shall we? Just in case any.
We do have time today, so by all means, let's go.
Hi, Julian. What is happening with Treasury yields now, please? It went down and gold was up, and heard US dollar yen will head possibly next week. I don't know. Okay, so right. So Helen, look, there has been a reasonably good correlation, not minute by minute, but there has been a reasonably good correlation on a day-to-day and week-to-week basis between interest rates, long-term interest rates in the United States, that's 10-year, 30-year yields, and gold. So the higher yields go, the lower gold goes. Now, there's an argument for that, and there's a rationale for that. It's to do with the real yield, which is the nominal yield minus inflation. As we all know, last week there was a big, I think last week, the week before, no, last week actually, 13th, yes, so it'll be last week. There was a big inflation number in the States. It came out, I think, about 2.5, roughly something like that. But it was a big jump from the previous month, which was like rebasing the year-on-year figures anyway. A bit of stats and stuff like that. Pretty much the market knew it was coming, and they knew that rates were going to the inflation was going to be higher. So it was predicted. And as a result of that, don't forget, the market predicts everything. So if you know about it, the market knows about it. Right, so they then dropped yields afterwards, and the reason why yields went down was because the news wasn't as bad as it could have been. Right, another classic. It was bad, but it wasn't as bad as it could have been. So they discounted bad news. They didn't discount not as bad news. Right, so as a result of that, prices rose in the Treasury bond market and yields fell. Now, as yields fall, okay, then gold becomes more attractive. So interest rates fall, gold becomes more attractive. That's pretty much a simple argument, right? Because gold doesn't pay any interest. So there we go. And that's pretty much the reason why gold rallied last week. There seems to be that correlation. It's been working for the last 9 months to a year. I suspect it's going to carry on working. When it breaks down, that'll be also really important information for you as well too about what's going on. Because if it does break down, then that's either really bullish for gold or really not bullish for gold. So we'll see We'll see what happened. And look, China isn't buying gold for digital yuan. I don't think that's what's happening. Somebody has drawn a line there. So all the central banks around the world, most of the major ones, have been increasing their gold holdings and decreasing their US dollar holdings. Okay, that is a conscious decision being made by quite a few central banks at the moment. And then China is creating a digital currency at the same time. I don't think those two are related at all. They may be, but I think that's a bit of a stretch, whoever's coming up with that. It's just a rebase of the Chinese reserve position in line with a lot of the Europeans and also the other Asian central banks as well too. It's not just China that's doing it. There's been many other banks have been buying, central banks have been buying gold as well. So I hope that answers your question. And that's been over the course of the last 18 months, that gold buying. As indeed gold has come down, they've been increasing their holdings.
Julian, thank you so much. Roy and Helen, look, thank you for your questions. Really appreciate them. Normally, we don't have time on a Sunday to answer them, but thank you, Julian, for doing that. We do have a little bit of space today because of an event that most of our presenters are attending at this time. Mate, you're released. Thank you very much indeed.
Not at all, guys. Look, everybody have a great trading week, and I think it's going to be exciting. I always think trading is going to be exciting, but next week could be a special one. So let's keep our eyes open, and good luck to everybody.
Watch this space.